Hello, how's everyone doing today? Welcome to today's episode of Logtech Live. I'm Eric Johnson. I am the senior technology editor at the Journal of Commerce, but more importantly, I am the host of Logtech Live, first and third Fridays of every month, put together by the Let's Talk Supply Chain team. We have a great show for you today. I have a really interesting guest who I've been wanting to have on for a long time, and we've finally got a chance, figured our schedules out to have him on today. I will be introducing him in just a second. But a few things to sort of walk through before we get to news of the week. Next week, I will be in New Orleans. If you've listened to any episode in the recent few weeks, you know that I'm part of the JOC Break Bulk and Project Cargo Conference next week in New Orleans. If you haven't registered, there's definitely still time to register. You can register up until 5 minutes before we start if you want. We are in New Orleans. It's the preeminent event covering the project and break bulk cargo space. No surprise, I'm going to be leading a session on Friday, the third day of the conference, very much focused on the technology element within Project Cargo, and really about the lag that the Project Cargo space faces relative to other cargo segments. So very interesting session. We've done a lot of prep on this. If you're going to be there, make sure you set aside time to go to that session. Hopefully I'll have some cool output from it as well once we're done. So if you don't make it down there, but why would you not make it down there? Use the code. If you're still on the fence about coming and you want to come to New Orleans. It's nice. It's warm. It's the Big Easy. Come on. What more do I have to convince you with? Use the code EricJ to get 25% off the pass for the event. All right. Next event to talk about, Inland 24 is a bit farther away. That's in the fall, September 30th through October 2nd in Chicago, downtown, beautiful downtown Chicago, right on the river. It's a great spot. This year we launched the registration and the early program earlier this month. We're making huge progress on the program. We're going to have this thing pretty much buttoned up in the next few weeks. We have a great list of speakers already across all of the major modes that we'll be covering. I also wanted to highlight, and we highlighted this week in a email to our JOC list, is we have an expanded tech program this year. If you've been to Inland before, you know that I lead a few sessions around how software is impacting trucking, how it's impacting the brokerage space. We've sort of dabbled in this, a little bit in automation, a little bit in pricing and procurement. This year, I convinced the powers that be, let's have a bigger sort of presence around tech this year. So we have tech sessions on both Tuesday and Wednesday of the event, and more of them. And it's sort of like now a bedrock part of the program. So I'll get more into that in future Logtech Live episodes, drilling into some of the exact things we'll be talking about. I might even have a guest or two that's also going to be on the Inland program. So pay attention to that. But definitely register. This is the best trucking intermodal drayage event in North America, and you really don't want to miss out. So that's my pitch. I'm also going to be at Home Delivery World June 5th through 6th in Philadelphia. Really excited about this. This is my first time going there. I'm leading a panel on the LTL market, and really excited about that. I have a couple shippers on there. That's always good to hear from the people who actually are moving, whose cargo is being moved. And I know Sarah will also be there leading some keynote sessions, I believe. So definitely make your plans for Philadelphia in early June, and ping me if you're going to be there. I would love to meet. Last thing, blended pledge, donate to it. We actually saw a huge, coming out of TPM, we saw a huge uptick in donations, which is great, but we still need more. Nowhere near the goal that's been set by Sarah and the Blended Pledge team. Go to the comments, find the link, donate $5, $100, whatever you can afford, right? Just this goes to making sure that conferences are diverse and making sure that people who get invited to conferences have the budget to travel and represent the industry as it actually is, not a bunch of gray-haired white guys up there talking on manuals. So, all right, quickly, let's get into some news of the week. I did a story last week about a study that the Global Shipping Business Network did. This is a consortium of a few carriers and terminal operators, predominantly in Asia, that did a study about what the climate impact would be if we moved entirely to EBLs. And it quantified the amount of the kgs of carbon that are emitted, literally flying paper bills of lading around the world, which seems like, I mean, I think you could call it quaint, but it's worse than quaint because it has an impact on, obviously, on the climate, as this story highlights, but also it's just not great practice to be flying pieces of paper that sometimes need to be amended around the world, and then having to fly the amendment, the amended document later because it's been amended. We live in a digital age. How can this not all be done, via systems? So just went into some of the quantifications of what the world would look like if we do move. And remember, as we've talked about on the show before, most of the ocean carriers, at least 9 of the top 10 that are in the Digital Container Shipping Association, have committed to migrating to 100% EBL by 2030. So here's a story that kind of quantifies the impact of that. Real quickly, my colleague Bill Cassidy did a story yesterday on Penske, the big logistics and trucking company. They released a product that was intended to help use AI. AI is everywhere, I know, to help private fleets, optimize private fleets. AI, it's interesting. It comes up in every single conversation, and I really try to focus on AI as a tool and not as the product. I think we've even talked about that on this show. If someone is pitching you AI as a tool, you should run for the hills. If they are telling you they have a product that solves a problem, in this case, benchmarking and private fleet activity, and they use AI to accomplish that, that's the way it should be thought of. So definitely check out that story. Bill always does a good job of really relating technology subjects to actual operational issues in the trucking space. And then the last story I'll highlight, this was a story that my colleagues, Mark Saccone and Bensi Matthew, who's based in India, did about the growth of sourcing in India as sort of a bulwark against China in some ways, and really just taking advantage of all the opportunities that are out there in India. I moved to India for 5 years. I don't know if many of you know this. I lived in India for 5 years, from 2007 to 2012, working for a previous publication, thinking that was going to be the point at which the inflection point. It was, China was ceded to the WTO in 2001. They had seen huge growth in exports, containerized exports especially, throughout that decade. And the thinking was, oh, India was next. India was going to, sort of unleash its economy and the size of the population and, labor costs and all that things. We're going to create a second sort of sourcing giant. It didn't happen for various reasons. But what we have seen after the pandemic is that there has been a shift, and we are starting to see it grow. And so this story does a good job of explaining and contextualizing that growth and explaining some of the reasons why it's happening and where it may go next. So definitely encourage you to read this. As someone who has India near and dear to my heart, I really wanted to highlight this piece because I think it's really interesting. All right. With no further ado, let's bring our guest on this week. Really delighted to be joined by Tim Nicolle, who's founder of a company called PrimaTrade. Tim, great to have you on the show. We've talked a bunch of times, and really delighted to sort of be able to kind of talk about what you're doing with my audience.
Thank you, Eric. Yes, here I am. Finally, we're talking. Excellent.
Well, give us a little bit of sense of before we get to what PrimaTrade is, give me a sense of what your background is.
Well, you talked about grey-haired white men. Probably, unfortunately, that's the category.
We're in the same boat. I know. Doesn't mean we don't have something to share, but like it's nice to hear other perspectives every once in a while. But I'm really glad to hear yours. So.
Well, yeah. So I guess I guess I'm one of the guys who you can partly blame for the financial crisis in 2008, because my core history and competence is in securitization as an investment banker, structured finance, financial engineer, and some of the products that blew up some of your big companies are products that I pioneered actually back in the 90s as an investment banker. I also have spent, I've worked for big banks. I've also been a partner in PwC for a couple of years in their corporate finance side, lived in Moscow for 6 years, which was really an amazing time. It was.
What was the time frame on that?
2008. So when the financial crisis happened, securitization guy in London, it's not going well.
Yeah.
So I was offered a job in Moscow by one of my clients. So I headed out there and stayed there till 2014 when the political environment in Russia changed quite dramatically in 2014, and decided I wanted to come back at that point. But I was a partner in PwC in Moscow. Fantastic firm. Really enjoyed that in corporate finance. I'm not an audit guy. So I've done lots of stuff, and I actually also many years ago built a fintech in the 90s. I took time out of the financial.
It wasn't called fintech back then.
It wasn't called fintech, but I built a company called Demica, which is still around today. I think they're processing today about $200 billion worth of trade flows on their platforms, receivables and payables. So it's a financial business, very well run by nothing to do with me now. I can't claim any credit for all their success today. I'm the parent. I did the DNA. I did the bit at the beginning.
They flew out of the nest and made something of themselves.
Cleverer people than me took it on.
Got it. Okay, well, so that you have a really interesting background, not the background that a lot of people who come on this show have, which is great, because I think one of the things that the industry has benefited from in the last 10 years is a migration of people from other industries who never would have necessarily thought about it. So, okay, so what's PrimaTrade, and how and why did you start it? Who does it serve? Give us all the details on that.
Well, it's really, it's a story I'm very passionate about. So it's actually a pivot. So I started in 2015 when I came back from Russia, and I kind of thought, I don't really want to go and work for a bank, because honestly, it's not like it used to be. It's obviously heavily regulated now, lots of compliance. So I built.
I work for S&P Global, so I get it.
Yeah, that's right. Rating agencies are regulated. Absolutely.
I could spend my whole day doing compliance training and verifications. So yeah, for sure.
So I set up an export finance company, which was the predecessor to PrimaTrade, called PrimaDollar, and we did a simple thing. When an exporter somewhere in the world put stuff on a boat, plane, truck, whatever, we'd give them the money for the stuff and let the buyer pay later. And that's a great business. We scaled it to 40 countries, and we had a big balance sheet. I used some of my investment banking skills on the funding side because we needed to get lots of money, proper fintech. So we had a tech platform that we used to run all these shipments, keep track of all the paperwork, make sure we knew who owed us money and paid the money and all that kind of jazz.
Would this have been a replacement for a letter of credit, essentially?
Yes, exactly.
Yeah. Right.
So I have my views about LCs. I think it's one of those instruments everyone has opinions about these days.
Sure.
Yeah. So effectively, an exporter would be able to be paid what we might call TT in advance, or cash, basically at shipment, before they handed over control of the bill of lading, for example.
Yep.
And therefore, they wouldn't need a site LC or a USENS LC. They could just simply get the cash before they handed over the goods. So very efficient. And obviously, it's what we would call a triangular product. So LCs have got 4 corners: import bank, export bank, importer, exporter. It's like a rectangle. whereas this international factoring product is a triangle.
Yep.
You've just got the importer and the exporter, and we would sit in the middle, and we deal with both ends.
Yeah.
Only one mouth to feed. Very quick, very efficient. It's a big industry today. But PrimaTrade had a slightly rough time in the COVID era.
Yeah.
Simply because we got hit with some credit defaults. Credit insurers didn't pay as they should have done. They did eventually after I put lawyers on them. But by then, the funders were all going, credit insurance, where's the money? They lost confidence in the funding structures we were using. And that's very, very hard to rebuild. So we pivoted the business into pure tech and rebranded as PrimaTrade. So I sold the funding business off and restarted as a tech company. So we've had some real twists and turns and adventures on the journey. But it means that we've ended up being exposed both to your Logtech world in a big way, as well as to what we might think of as a finance or fintech world.
Yeah.
And PrimaTrade is kind of a blend of both Logtech and fintech. It's a really interesting challenge actually today, because you know very well your space with some companies who've really made it big, other companies who promised a lot and didn't get anywhere, fintech the same.
Yep.
But these verticals of Logtechs and fintechs, a lot of the big games are playing out now. There'll be consolidation. There'll be people falling away. We won't hear of them again.
Yep.
There'll be some big winners. But actually, I think there's real value sitting in this intersection. Half Logtech, half fintech. I don't know what you'd call us. A Logtech fin, maybe? I don't know. But we're in the middle. There's stuff there to do.
Finlog.
So PrimaTrade focuses on the financial supply chain.
Yep.
So you've got your CargoWises and Project 44s and your digital forwarders, your Flexports and your Fortos and your Zen Cargos and these guys who are all about the physical supply chain. But the financial supply chain is pretty neglected, actually. It's pretty well sort of unsupported as a technology problem that needs fixing. And there is a technology problem there. And the great news is that the things we do for our clients generate huge amounts of value. There's actually, we've got a physical supply chain, throw technology at it, you get some wins. You were talking about EBLs and carbon footprints. If you throw technology at the financial supply chain, the wins are 10x. We save our clients typically 1% on everything they spend in their supply chain. So if they buy $100 million worth of stuff, they can save $1 million by making their financial supply chain more efficient, which we do by throwing technology at it.
And your customers are manufacturers, suppliers, essentially?
Actually, manufacturers, but we're on the import side. So we did two things. When we did the pivot, we dropped the balance sheet to become pure tech, but we also changed the marketing round. So instead of working with selling to exporters as our customer, we sell to importers as our customer. And that's just a lot more efficient, actually, from a marketing point of view. Economy
of scale on that side.
That's right. Cost of sale is always high in our industry.
Yep.
But it makes a lot more. The unit cost economics working import side are much better than working export side. So that's why we made that change.
So one thing I have heard, and I think this is something that I've even heard you talk about, but there's this sort of, I want to call it a cliche because it's most cliches are true, but it's this idea of a gap that exists in trade finance. Can you explain what the trade finance gap is and why does it exist?
Yeah,
How big
absolutely.
is it?
Well, I don't. The ADB, the Asian Development Bank, always has a magic number that they pull out, and it used to be 2 trillion, and I think this year it's 2.5 trillion. And I can't honestly tell you how they come up with that number.
Just add a certain percentage of growth to it, and But what is the trade finance gap? Let's start with that. Like, what do we mean when we say there's a trade finance gap?
So what we mean is that typically small companies in often emerging markets find it very difficult to give credit to their buyers when they ship, because they can't get access to the liquidity. There's no one out there saying, that's fine. You know, you've made the stuff. That's good. I'll lend you money against the stuff that you've made as collateral.
Yeah.
But then we have this collateral gap that emerges when the exporter puts the stuff on the boat or hands it over to a forwarder. They've lost possession of the goods, but the cash hasn't arrived. Mm-hmm. And what they've got is an invoice from some company in some foreign country that might or might not be paid in full. And that's a very hard thing to raise cash against. So they've got this collateral gap. So many years ago, we didn't really have a trade finance gap. If we go back to the 1960s, 1970s, the LC was there and everyone was using letters of credit. And the LC kind of solves the trade finance gap problem, because when the exporter hands over the goods, they're sitting there with a bank guarantee that they'll get paid, provided documents are in order.
Yeah. That's
what the LC says. Yeah. And then today we have 90% of trade in manufactured goods that's on open account. Open account means there's no LC. It means the buyer says, send me the stuff. I promise I'll pay you later. And that's a bit of a crummy deal for the exporter, actually.
Yep.
And there's a lot of debates about how we got here. For example, one of the reasons I understand, I wasn't in trade at the time, is that during the noughties, so 2000, 2010, when China, manufacturing was moving to China, Chinese banks were given lots of regulatory carve-outs for export loans. And you have Sinosure piling in, doing lots and lots of credit cover, pretty much blind on all of these companies outside China. And so Chinese exporters started saying, look, I'll just ship and you pay me later. They borrowed from their bank. They got cheap money from state-controlled banks. And therefore, open account became the standard. And of course, it's really hard to roll the clock back, to go from open account back to LC. Who, honestly, I mean, I love LCs, but who really wants to do them? Really? Really? I mean, they're just, you have to know a load of stuff. It's really complicated.
Yep.
And so here we all are now. We've got 90% of manufactured trade flowing on open account, and buyers like getting their credit. They want to pay for the stuff they're buying when they sell it themselves. They're pushing this liquidity gap onto their suppliers. And if you're not a big company, that's really tough to handle.
Yep.
Is that good? Did I get there? Did that kind of say
it's clear to me. If anyone has any questions, please pop them in the comments. Happy to entertain those. And I definitely would encourage you to follow up with Tim afterwards if you want to dig into this more. He's a wealth of knowledge. Well, so what can you explain for everyone the role that I'll say technology or digitization of the process? What role does that play in sort of helping to bridge this gap? So helping to arm those exporters who are faced with open account or a laborious LC process a better way.
So we certainly don't have all the answers, but the answer that we use is a very simple one. So Eric, if you're the buyer and I'm the supplier, what we do with technology is get you, Eric, the buyer, in a position where you can say you'll pay the invoice. Once you've said that you'll pay the invoice, we've now got a different situation. We've got you nailed on to the payment. You're going to pay it later, but you've said you're going to pay. No questions asked, hell or high water, rain or shine. And we can use that commitment from you to get money to the exporter.
How does that work?
So that's just what we call discounting. So we have lots of financiers who are on our platform, and there's plenty of other ways of doing this, who will discount a commitment from a buyer and give the cash up front to the exporter. For a fee. For a fee, that's right, which the exporter pays.
We see this a lot in the trucking space, right? Where in factoring, where
that's right. So factoring sounds kind of expensive and complicated, but honestly, it's a very simple process once you apply technology to it, because the tech does the work. So basically, what our platform does is it puts you, the buyer, in a position where you can give that commitment that you'll pay very quickly.
Yep.
So the problem we all have is the old problem of paper meant you didn't know what was on the boat. You didn't know what was in the boxes. and it would take a long time for all of that paperwork to arrive to you because you want to see the packing list, the transport documents, certificate of origin, compliance paperwork, inspection reports, load of stuff.
All physical.
And a lot of this is on paper, and EBLs don't solve this, by the way. That's just one of the bits.
Of course.
There's loads of other bits.
That's the tip of the iceberg. Yeah.
That's it. So the reason why buyers find it very difficult to give a commitment to pay very quickly, because the paperwork's got to travel or be made available. So if we can speed up the collection of all that paperwork and, for example, turn it into data, we can speed up the moment. We can bring forward the moment when you can say, yep, okay, this invoice will be good to pay.
Yep.
Which means we can then get money to the exporter.
So this is something, you had sent me some interesting stuff to read, which we can go into. And I found one thing I found interesting was the dichotomy of what you called cash against documents versus cash against data.
Yeah.
Is this what you mean by that? How can you just explain that a little bit?
So so the innovation here is not AI or machine learning or blockchain. It's taking stuff.
Disappointing. So disappointing. No, I'm just kidding.
Yeah, I haven't got a big enough brain for all that, Eric. What we're doing here is taking things that we all know about and combining them in a new way to make it work better.
Okay.
Yeah. So that's the innovation here. So that letter of credit product we talk about, that's effectively a cash against documents process. There's more to it. There's guarantees and other things in LCs. But in principle, the exporter provides the documents through the banks to the BCO, the importer. And the importer says, well, based on those documents, I'm okay to pay. And then the banks move the money and the exporter gets his cash. And it's all supported by a guarantee because it can take 2 or 3 weeks for that to happen.
Yeah.
And that's painful for the exporter.
Right.
So that's cash against documents. That's hundreds of years old as a process. So our idea is so simple. What about if we just got all those documents turned into data up front? And then it's data. So it moves like that. And even better, we can add automation. Because once we've got it in data, we can say, well, does the number of cartons on the packing list match the number of cartons on the transport document? Do the number of pieces on the packing list match the number of pieces on the invoice? Does the dates and the names and the purchase order codes on the inspection report match? You can imagine. So this magic, so it's all about, so the problem we thought about was, how do we get all this paperwork into data? Who do we ask? Where do we get it from? How do we do this really fast? Because as soon as we can get it into data, we've got 2 magic outcomes. Number one, I can send it all to you at the speed of light. And number 2, we could actually automate the process of checking it. So we're going from, so cash against data means ship on Monday, digitize on Tuesday, cash on Wednesday. Compared to LC, which is ship on Monday, collect paperwork, give it to your bank, DHL, to the importer bank, importer bank inspects it, cash on Wednesday fortnight. So cash against data is a magic trick which speeds up the process that we used to do when we did LCs. And it means that obviously there's no guarantee here, there's no bank guarantee, but because it happens so fast, you kind of don't need one. You need the bank in there because it takes a couple of weeks. So the exporter has to hand over the goods because there's a couple of weeks.
It's almost like an escrow, right? Like
that's right. The banking machinery will wind its way through. Whereas if we can do it really fast, you can get the banks out. Not that I love banks. I've been working for them most of my career, but this is an operational activity. And so then the question is, where do we get this documents from? Who does the digitizing? And here the breakthrough we had was very simple. The exporter actually has all this paperwork. So why don't we ask the exporter to do it? Now, we don't want exporters sitting there typing lots of stuff in. So what we do is we put a portal so the exporter can upload copies of all this paperwork, scans, PDFs. And then we have what's called OCR technology, which scrapes all the data off the documents, organizes it all for us. And then our software does all this checking And so literally an exporter will take a few minutes to upload all this paper. It doesn't take very long. They correct any mistakes. OCR isn't perfect.
Mm-hmm.
So we get the exporter to correct the mistakes if there are any. And then they press the button and say, right, if all my paperwork's in, our software will then immediately make a decision on whether the invoice is okay to pay. And if it's okay to pay, the exporter is given an offer for immediate cash, which they can accept. We generate a document to do that on the system, and the money will arrive because we have financiers on our platform who will then make the payments. So this is democratizing that process of getting cash to exporters.
We had very interesting. We had a question that came in from Sheshwat, who's asked, "Is this similar to Drip Capital?" I know I've obviously heard the name, but I wouldn't be able to tell you what the business model is. So can you?
I know the guys at Drip very well. They're a great company, actually, a kind of American Indian hybrid, I would call them.
Okay.
They used to be a competitor of mine when I was doing the financing side. It is very like what Drip Capital does, except that we do it with very high levels of automation and massive scale. So as far as I'm aware, Drip, for example, only participates with its own money,
Mm-hmm.
whereas we work with syndicates and banks and lots of people.
Taps into those financiers, basically.
We're not a fintech now. We're just a tech, really.
Yeah.
And so it's actually just taking what Drip Capital does, which is typically export side, making it work the other way around. So when we work with a big company, and we will then get all of their suppliers will have access to immediate liquidity when they ship.
Yeah.
And our big company, our client, number one, doesn't have to do any work because I'm afraid we're making the exporters do the work. So they're like the spider in the middle of the web, but they're sitting very pretty and comfortably.
They're just waiting. They're just waiting for a green light, and then
it's all happening out there. It's federated, and then they also don't need to use their own money to pay these suppliers quickly. And we do another thing, which is a huge benefit.
They're paying you according to the original terms with the supplier, essentially.
That's right. So they'll pay on 90 days or whatever, and they pay the financier.
Yeah.
And our platform is
not you, I should say, the financier that's connected to your platform. Sorry.
That's it. So we're orchestrating this dance between the suppliers, the importers, and the financiers, and we're orchestrating that. It's not like a marketplace because this is a credit product. So credit is a relationship-based product. So one of the services we provide is going out and finding money, actually, because often we need to do that as well.
Yep.
And then we plug it all together, and we actually can go live without an IT project, because supplier data, as I've described it, is a new data source.
Mm-hmm.
So we don't need to interface to accounting systems and other things. We can just literally switch this on. Liquidity then flows through the supply chain. And a byproduct of what we do is that we end up with an enterprise level picture of the whole of the financial supply chain at transaction level. So we have amazing dashboards. And I was talking to Anthony Miller earlier in the week, who told me absolutely not to use the word visibility under any circumstances on our call. You know Anthony very well, Eric. Really, really smart guy. So I'm still using the word visibility, though, because I can't resist it, because we do deliver enterprise level visibility of supply chains, but without all this complexity of trying to interface to lots of forwarders and lots of carriers and
terminals,
all the spaghetti. Because honestly, we just get the data from the suppliers because they've got it. And so it doesn't matter how many ERPs and legal entities, and
I think it's a different type of visibility than I think is the bad word that Anthony's sort of.
You're absolutely right. This
trying to keep you away from.
We've got no moving dots on a map.
Yeah.
We could put them. We could do it. That's just some API calls to the guys who've got the feeds. But our clients don't really value that. Yeah. But what they do value is the ability to drill into these supply chains and see how suppliers are performing. We track the number of days between an order and a shipment, between the shipment and when we get the documents.
So it's very it's visibility that's very upstream from the like in transit transportation visibility. Yeah,
you've got it absolutely right.
how are carrier? I mean, you mentioned just a second ago carriers and forwarders, right? They have been a part of the process. We've seen both of those entities offer trade finance tools in recent years. How do they sort of fit into this?
Well, actually, we have history there. So in 2020, in my first business, we did a big joint venture with MSC.
Okay.
And then we also did quite a bit of work with SIVA and then also with WOCL.
Okay.
So these initiatives didn't really come to anything. And I've been looking back, and it's so for me, it was just like there's an obvious reason why the logistics industry and the financial process should join up and should work together. But it didn't, these initiatives didn't work for two reasons. The logistics relationships are in procurement and in transport management and logistics, not the CFO. So we had a audience problem.
Mm-hmm.
So we couldn't easily bounce from the logistics relationships to the financial relationships in the buyers.
They had financial responsibility in so much as they needed to pay bills to transportation suppliers. But I would agree with you that the rank and file logistics person doesn't have a lot of experience with derivatives or, you know, exotic financial instruments, basically. So,
well, they didn't really have a path to the CFO or the treasurer,
and especially that, correct?
Yeah, and that's the person we talked to. The second reason was it was actually really interesting. It's about adverse selection, because basically, if you've got a company that's ended up discussing credit with their forwarder, everyone has already said no.
Interesting.
So now, does it mean that there isn't something to
creditor of last resort, maybe is what?
Well, that's right. And then if you're the financier, we were the financier. We just kept saying no. It's like, well, okay, but I don't like the credit. I mean,
interesting.
So we never managed to make it work ourselves. Someone may do this, you know. We don't have we're just bunch of guys. You know, we couldn't find a way of making that equation work. But does it mean that there isn't something to do here? So we've been talking about physical supply chains and financial supply chains. At the end of the day, we're processing the same basic stuff. The finance guy who's got to make a decision on whether to pay the invoice wants to know if the paperwork is in place to land the product.
Yep.
Do we pay the right? Is the HS code right? Are we going to pay the right tax?
Yep.
Have we got the fumigation certificates? Are we going to get hit with the WRO because we don't have evidence of the sourcing map, you know, whatever it is, where it's all come from? So the future and where we want to try and go in our business is this Logtech fintech thing again. It's sort of, there's the financial supply chain, which has been sadly really neglected. And you have the physical supply chain where tons of Logtech investment is going. But in the middle here is a really, really interesting space. So stuff is going to happen.
What's interesting is, if I'm hearing you correctly, tell me if I'm wrong. You have and because I wanted to ask, like, why are we in 2024, long after banks have sort of digitized a lot of their transactional stuff? We're a decade into the logistics industry doing the same. Why are we still talking about getting traction for this on a big scale, as opposed to it have already been happening? And what I'm hearing is the banks are still dealing with sort of the infrastructure, or sort of reverting back to the infrastructure for financing that has long existed. And the companies that have a lot of data, ocean carriers, forwarders, are not the right entities to be offering these services. So you need sort of a player in between those two. Am I understanding that correctly?
I think you need some glue between the money and the logistics, and that glue ultimately will be technology, and it's not going to happen in 2024 in my view. So there's a parallel here. If you think about when you go to buy a car, and you see the car and the sticker on the window might say $199 or $299. What they mean is a month. And that's because when you buy the car, most cars are bought with finance, you're buying two products.
The car and the financial product.
And it's been merged into one decision.
Yeah, that's interesting. That's a good comparison.
So this is why I got very excited about logistics, because surely the forwarder could rock up to the yard, pick up the container, hand over the cash for it, and get the money later from the buyer. It's the same. This is the vision. That should be how it is. Now, what allowed the car industry to reach that position was the banks came to the party. So that car dealer who is selling both the finance and the car,
he's a channel partner for the bank.
He's representing a bank. There's a bank here. Wells Fargo is there. JP Morgan is there. I'm sorry, I'm not very good at US banking brands, but they're all going to be there. They're there.
Yeah.
Now that when
as well as Toyota Financial or BMW Financial, right?
Of course. Well, GM Finance always made all the money, and they lost all the money making the cars and made all the money financing them. But you're absolutely right. So in the end, it's not tech that's going to make this happen, and it's actually not small independent finance companies are going to make it happen because of the adverse selection problem. It's when the banks rock up with their clients, and it becomes driven from the finance side, and then the logistics is bolted onto the finance. It's bolting the logistics onto the finance rather than the finance onto the logistics. That's the route, because that's how the car industry got to that result.
We are, Tim, we're running out of time. This could go on way longer. This happens with a lot of guests, honestly, but this one in particular, I feel like we have so much more. I did want to ask, I have one last question, but before that, I did want to ask a question that came up from HC. Thank you for submitting these questions. How do you manage the trade credit and political risks? Do you insure? And how do you manage trade transaction and performance risks?
So those are great questions. So we don't have the credit risk as a company. And in fact, it's the financier, and our job is to make sure the financier has the buyer's risk, because the buyer is going to be big. The suppliers are typically going to be small. So we want to have the whole funding running on the buyer's credit, not on the suppliers.
Got it.
In terms of the transaction risk, what if the boxes get lost? What if the strawberries get spoiled? What if the garments are the wrong color? Those are risks for the buyer. So when our software is running, we do a magic trick for the buyer, which is we allow the buyer to do a partial approval. You don't get this really with LCs. At least I'm sorry, there's probably an LC guy out there saying you do, because there's such a big field. But my understanding is that LCs, for example, are all or nothing. You either do the whole lot, pay the whole lot, or you don't.
Yep.
In our system, the buyer sets the advance rate. So he can say, well, I know this supplier has been doing it for 10 years. He's going to be great. I'll give him 95% of the money now, and we'll make a balancing payment later for the balance.
Yeah. This
supplier, brand new, strawberries might spoil. The reefer might not work, maybe. So I'll only give him 50%. And the buyers can dynamically manage the risk of these very early payments, which is what is doing the trade, solving the trade.
And then pay the remainder if there's no problem, or not pay it if there was a problem.
Yeah, they do. They issue debit notes in the finance department to sort of deduct. So that's how we enable buyers dynamically to manage the risk of these very early payments. And the buyers get a benefit because the suppliers can agree a discount for the immediate payment, which exceeds the finance cost. And that's how our clients save often 1% on everything they spend. If the exporter agrees a discount of 3% to get the payment immediately, or 90% of it, and the money only costs 2%, the buyer saved a whole percent. And these are huge wins in the finance supply chain. It's not just saving $40 on the presentation of a bill of lading or making it go 2 days quicker. It's big money.
Tim, fascinating discussion. I have to ask you, I asked this of all my guests, who's your favorite band or musician? And then you have to tell us why before we wrap up.
Well, I'm going to show my age and the fact that I'm very British, because about 3 or 4 miles away from where I live here in the UK is the school where Genesis was formed.
Oh, it's a great one. No one's picked Genesis. We had someone far younger than you a couple episodes ago pick Steely Dan. So it's, there's still the newer generations are respecting the older music, but that's a great one. Genesis is awesome.
And where I live here in Surrey is full of aging pop stars. The maths teacher in the local school was in the other half of a semi-detached house with Eric Clapton in the other side.
Oh, wow.
Kids. This is a sort of microcosm of aging and famous rock stars. They all come back and retire here as well. There's an awful lot of property around here owned by all sorts of great names.
So, how can people reach out to you, Tim?
If you're happy just to go on our website, prima.trade, you can find me there. And if you just write to Tim at prima.trade, you'll reach me.
Cool.
We're very easy to find.
Thanks so much, Tim. Fascinating discussion. We have so much more to talk about at some other time, but appreciate it. Definitely reach out if you want to hear more or just kind of have questions that we didn't get a chance to answer today. But thank you, Tim. Really appreciate you making time.
Thank you, Eric. Thank you. Really delighted.
Yeah, we'll talk soon. Hey, thanks to Nadeem, thanks to HC and Shashwat and Sane. I hope I'm pronouncing all these names right. And Dale for asking great questions, far better than the ones that I had for him. All right, really quickly, dad joke of the week time. We had the eclipse, 11 days ago in the US. So I felt like I had to do an eclipse joke. Dad, can you explain the eclipse to me? No, son. That's the joke. You get it? No sun, no sun. All right. It's the best I could find on short notice. Eclipse jokes or not. I don't think there's a whole lot of eclipse jokes. Maybe there is, and I just missed it. But in any case, thank you, Tim. Fantastic discussion. Definitely reach out to him. Really fascinating, segment that he's targeting. Hopefully, I'll see some of you in New Orleans next week at the Break Bulk event. Really looking forward to it. If not, register for Inland. It's going to be great. Chicago, end of September. Or definitely see you at Home Delivery World in Philadelphia if you'll be there for that. Thank you to Nicolle, world's best producer. Thank you to the whole Let's Talk Supply Chain team. But most of all, thank you to all of you for tuning in. I'll see you in 2 weeks. Bye, everyone.